Picture this. You sit down at your desk 15 minutes before London Open. TradingView is glowing on 3 monitors. ES, NQ and USD are all boxed up in overnight ranges. Yesterday's high and low are marked. Your Asian session liquidity zones are highlighted. Your newsfeed is quiet. You told yourself before bed, tomorrow I only trade in the direction of my daily bias. One clear story, no revenge trades, no random scalps. But now that the candles are actually printing, your brain is doing that thing again. One part of you is convinced today is a trend day up. Daily chart is in an uptrend. We close strong, and you can already feel the dopamine hit of catching a clean breakout. Another part of you is staring at a tiny 5-minute double top and whispering, short it, short it, short it. Your cursor floats over the sell button. Your heart rate kicks up, cortisol spikes, adrenaline makes the little wicks look bigger than they really are. You zoom to the 1 minute, then the 15-minute, then back to the daily. The more you click, the less clear it feels. In 10 minutes, you have managed to draw 3 different scenarios, 5 extra lines, and 0 conviction. When London finally opens and the first real volume hits, you're flat, confused, and chasing every wiggle because you never actually decided what your daily bias was in the first place. Here's the brutal truth most traders never admit. They don't really have a daily bias. They have a daily fantasy. A fantasy that today will finally be the big green day that fixes last week's drawdown. A fantasy that they can scalp both sides of the market without getting chopped to pieces. Or a fantasy that some magic indicator will tell them exactly what to do, so they never feel uncertainty again. Underneath that fantasy is a very specific set of trading psychology glitches. First, chart pattern hallucination. Your brain is wired by evolution to find patterns in noise. On lower timeframes, every 3 candles looks like a trend, a range, or a reversal signal. You start seeing what you want to see, head and shoulders that aren't there, order blocks on every consolidation, supply and demand zones every 10 ticks. You're not reading the market, you're projecting your fear and hope onto candlesticks. Second, entry hesitation paralysis. Mark Douglas talks about this in The Disciplined Trader and Trading in the Zone. The trader who wants certainty in an environment built on probabilities. You think finding your daily bias means finding the one guaranteed direction for the day. So the moment you see evidence against your idea, your belief system short-circuits. You freeze, you add indicators, you wait for more confirmation until the move is gone. Douglas, Mark, The Disciplined. Third, the overtrading compulsion. Brett Steenbarger calls this confusing productivity with activity. You equate clicking buttons with doing work. Instead of building a structured process to frame the day, you chase any candle that moves because your dopamine system loves action. The result is classic revenge trading loops. You take a trade that doesn't fit any bias, you get smacked, cortisol spikes, and now your only bias is make it back. 2. Brett Steenbarger. Psychology. Under the hood, this is pure neuroscience. Green P&L lights up your reward circuitry. Red P&L activates threat circuits. The same brain that evolved to keep you alive when a tiger jumped out of the bushes is now reacting to a 5-point move in ES. Adrenaline surges during volatility. Your visual system narrows, and you literally see less of the chart. Cortisol from repeated losses drains your impulse control. Serotonin drops after a rough week, and suddenly every red candle feels personal, like the market is disrespecting you. This is why the daily bias question feels so hard. It's not just, am I bullish or bearish today? It's, can I anchor my brain to one coherent story about the day? And then let go of the need to be right about every tick. There's a nasty trading paradox hiding here. The more time you spend staring at every time frame, every indicator, every Twitter post trying to figure out the day, the worse your bias gets. More analysis, less clarity. More screens, less conviction. The tighter you try to force your intraday bias, I must be long today, I decided. The bigger your losses when the market shows you a different story. Most traders handle this in the most expensive way possible. They let the market tell them their bias by losing money first. They come in with no plan, London opens, rips up 10 points, and they FOMO long at the top. When price snaps back into the range, suddenly they decide the bias is short and flip their position. 2 stop losses later, P&L is bleeding, cortisol is high, and their bias is now just anger. They're not reading order flow or structure. They're reacting to their own emotional state. This is where you see all the classic costly patterns. Averaging down because the bias is still valid. Moving the stop loss because it's just a stop hunt. Taking 3 or 4 trades in opposite directions in the same 30-minute window because the market is manipulated. They're not crazy. They're trying to force an intraday narrative onto something they never actually framed. And remember, in most markets, most traders lose money. Prop firms quietly acknowledge that the majority of new traders wash out. Retail stats from brokers show that a huge percentage of accounts blow up or stagnate. The traders who stay stuck the longest are the ones who refuse to admit they have no process for building daily bias. They think it's a talent. In reality, it's a routine. So let's talk about a trader who actually built that routine. Marcus is 27. He trades index futures and major FX pairs, mainly ES and USD, with a mix of systematic and discretionary tools. He's an algo hybrid. Half of his screen is code and statistics, the other half is pure price action. 4 years ago, Marcus blew up 2 small accounts trying to day trade like a hero. He'd come in, open TradingView, scroll through Twitter, watch a few YouTube pre-market plans, and then wing it. Some days he was the breakout guy. Other days, he was the mean reversion guy. Most days, he was both. And his P&L reflected that confusion. The turning point came after a 6-week drawdown where he lost almost 30% of his account. He went back through his journal and realised a painful pattern. His biggest losing days all had one thing in common. In the morning notes, under daily bias, he had written either nothing or 3 conflicting sentences. Possibly bullish if we break yesterday's high, but also watching for shorts into resistance, or maybe a range day. In Market Wizards, you hear the same line over and over from the greats. Strong opinions, loosely held. What Marcus had instead was weak opinions, tightly chased. So he did something different. He stopped trying to be a bull or be a bear, and instead built a daily bias framework that a quant would be proud of and a discretionary trader could actually use. His desk setup is simple now. Left monitor, higher time frame context, daily and 4-hour charts with only key levels, prior day high-low, weekly high-low, overnight high-low, a couple of moving averages, and volume profile zones. Center monitor, 1 hour and 15-minute for structure, trend lines, liquidity sweeps, Asia and London ranges, VDUAP. Right monitor, execution, 5-minute and 1-minute, order flow, level 2, footprint, and his P&L hidden by default. He starts every session the same way. Step 1, where are we coming from? He looks at the last 5 to 10 trading days on the daily and 4-hour charts. Are we trending or ranging? Making higher highs and higher lows, or stuck between obvious levels? This aligns with the adaptability process Steenbarger talks about. First decide what kind of market you're in before you decide what you're going to be in that market. Trading Psychology 2.0. From the best step 2, where is value? He marks yesterday's value area, overnight high-low, and any major volume nodes. If we're opening above value after a strong close, his default bias is pro-trend. If we're opening inside yesterday's range with no news, default bias is neutral, responsive. If we're opening below value in a downtrend, default is short the rips. Step 3, where is the pain? He checks basic positioning and sentiment. He asks, who is most likely to be trapped today? Late longs or late shorts? Daily bias for Marcus is not guess direction. It's guess who is screwed if we move. Now the key part, he writes one and only one sentence in his journal. Primary bias, today I am long, short, neutral. Looking to buy dips, BM, short rips, fade extremes in trend range conditions. That's it, not a paragraph, one sentence. And here's where Mark Douglas comes back in. Marcus trained himself to think in probabilities, not certainties. That sentence is never, the market will trend up today. It's always, if we hold above X and reject Y, odds favour upside continuation. I will execute in that direction until the market proves me wrong. That tiny shift removes the ego from bias. He's not trying to be right about the day. He's trying to align with the highest probability flow and then change his mind fast if the regime shifts. Because Marcus is an algo hybrid, his brain doesn't get to run wild before the open. He has a small script that tags the last 20 sessions as trend or range using objective metrics: range extension, volatility, and closing location. It prints. Today looks statistically more likely to be trend on range given current volatility regime. That keeps his frontal cortex honest when his emotional brain wants action. Of course, even with this structure, Marcus still feels the same biology as you. On days when he nails the bias early, dopamine surges, and the old overtrading voice whispers, "Size up, go for the kill, get that monster day." On days when the first trade is a loser, cortisol and adrenaline show up together and his chest tightens. That's where his process saves him from himself. Before the open, he sets 2 non-negotiable constraints tied to his bias: maximum of 3 trades in the primary direction before reassessing, maximum daily loss of 2R. After that, platform locked, no override. Those rules are boring, but they're survival. Risk management is survival. Most traders lose money not because their bias is wrong, but because they keep paying to defend it after the market has clearly flipped. So how do you build something like this for yourself without turning into a robot? You start with one core decision. I will never again let the market decide my bias after the fact. I will decide it before the open, write it down, and then let the market prove me right or wrong. Then you build a tiny, repeatable pre-market routine that hits all 3 layers: structure, emotion, and paradox. Structure first. Pick your product. Maybe it's ES, NQ, XAUUSD, or GBPUSD. Pull up the daily and 4-hour chart. Ask 3 questions out loud. Are we trending or ranging? Are we opening above, inside, or below yesterday's value? Who's trapped if we move 20 to 30 ticks in either direction? Write the answers down. Force your brain to compress the chaos into one simple narrative. Then emotion. Check in with your own state like a performance coach. How did you sleep? Are you coming off a big green day or a big red day? Are you secretly trying to make it back? The disciplined trader is very clear. If you bring unresolved fear or euphoria into the session, the market will amplify it. Your daily bias will quietly morph from read the market to protect my ego. Douglas Mark. The disciplined. Finally, embrace the paradox. You are going to be wrong. A lot. Daily bias is not a prediction. It's a starting hypothesis. The pros in market wizards flip their bias midday without drama when the tape changes. The difference between them and the average retail trader is that their identity is not attached to their morning sentence. To train this, you deliberately practice switching. Set a rule. If price cleanly violates both sides of your key level, say breaks above and then holds below, or vice versa, you will pause and ask, if I woke up right now and saw this chart fresh, what would my bias be? If the answer is different from your pre-market plan, you don't argue. You update. You're not betraying your bias. You're honouring the deeper bias, survival. Over time, something shifts. You stop waking up trying to guess the day. You start waking up to run a process. Finding daily bias becomes less about staring at screens and more about building a ritual that calms your nervous system and forces your brain into probability mode. You notice that when you do your pre-market journal, your first trades are less impulsive. You're no longer slamming market orders just because the first 5-minute candle is big and green. You're waiting for price to come into your zones, in the direction of your written bias, with confirmation from order flow. The numbers start to change. Your win rate might not explode. Remember, past patterns don't guarantee future results. But your losers get smaller and your bad days stop turning into catastrophes. Your average R per trade creeps up because you're no longer closing winners at the first sign of noise against your position. You finally feel what Mark Douglas meant when he said you don't need to know what happens next to make money. You only need a framework to act on the next edge without fear. Most importantly, your relationship with the market changes. You're no longer asking the chart to tell you who you are today. You're bringing a clear, flexible identity to the chart and letting price action either confirm or deny your plan. You still feel the dopamine when your bias plays out. You still feel the cortisol when you're wrong 3 times in a row. You still have days where you overtrade, force setups, and scribble angry notes in your journal. But now those days stand out as glitches in a system, not proof that you're a bad trader. You fix the system, you refine the questions, you upgrade the routine. And day by day, bias by bias, you become the kind of trader who doesn't need a magic indicator to tell them what to do. You sit down before the open, you build your story, you respect your stops, and you let the market be what it is. Not financial advice. Most traders lose money. You can still blow up if you ignore risk, move stops, or bet size you can't emotionally handle. But if you build a daily bias the way Marcus did, structured, flexible, and brutally honest, you give your brain a fighting chance to stop sabotaging you and finally trade like the person you know you can be.